Piece here from the Financial Times. How long can the U.S. economy defy expectations? And what it's talking about is, look, you've got tariffs that have gone into place. That's, I think, probably the biggest thing that's been visible from an economic perspective. When we talk about the labor force, certainly the impact of deportations on the labor force, especially in parts of the economy that tend to have large numbers of undocumented workers, think construction, hospitality, places like that. How's that potentially impacting the U.S. economy? And I think the big thing is when we look at two things. When we look at the broad economic data, and quite honestly, when you look at the stock market, neither one is signaling any kind of, flashing red lights right now. And so the question out there is the headline of, hey, how long can the U.S. economy, defy these expectations that maybe it's going to slow down?
Can you define the expectations right now accurately? Because I'm struggling to do so a bit.
Well, let me talk about my own personal expectations, because I don't know if someone else didn't, verbalize theirs. I don't want to speak for
Yeah, I'm just trying to read when I look at Fox Business or CNBC or Bloomberg, what the general expectations are. But go ahead.
I'll be honest. My personal expectations were that we would be starting to see more of a slowdown in the U.S. economy by late June, early July.
Yeah.
And we haven't yet. Now, granted, we haven't gotten any of the July data.
Sure.
And there was an overall slowdown in the first half of the year, but there's nothing that you can point to where you say, hey, this is because of policies X, Y, and Z that this is happening.
Yep.
And so I think the question and where I've gotten to in terms of kind of my mental approach to this is, look, if the first half of the year is most likely going to show somewhere around 1 to 1.25% GDP growth. Slower than last year, but again, we've seen some of these bursts before where this happens. If the second half of the year is in the same ballpark, quite honestly, I don't think you can really keep waiting around being like, hey, when's the impact going to happen? It's the same reason that we said, look, if inflation doesn't spike by the end of last year and unemployment doesn't spike, you declare that the Fed got the soft landing and you move on, because something that happens in 2027 has nothing to do with the Fed raising rates in 2022.
True. Yep.
So I'm kind of in the same ballpark on this, which is, hey, if you've got all these tariffs that went into effect, and if you have all these deportations that are happening, and the U.S. economy is still fine at the end of this year, fine, I would define as not in recession. How long are you going to wait for the effect to show up?
I would add one caveat where it's not in recession and also not experiencing over 4% inflation, which, again, either of those would be pretty surprising. But, I'm with you. We have seen in investors, markets, and the U.S. economy prove out to continue to be quite resilient, and you have not seen those more dramatic potential outcomes for markets that could have come to pass to this point. I still keep running the question. But by all accounts, it appears that primarily U.S. corporations are, I guess, what do you want to call it, subsidizing prices to consumers by eating into their own profit margins.
It's fine.
It seems to be...
I don't know.
Agreed. Totally fine. Does that change? Is just a huge question that I don't have an answer to. If I'm... Again, these aren't the companies that are driving the stock market forward, to be clear, right? We just talked about which ones are. It's Microsoft, it's Meta, it's NVIDIA. None of those are worried about the tariff impact and needing to drive prices through to consumers. If they have to, NVIDIA will have no issue charging higher prices to their customers. But for the other 497 companies that are out there, how long do you sit around and say, yeah, I'm willing to take the profit margin hit, I'm willing to see my stock price take a hit? I don't have an answer to that.
It's, again, the two things that are keeping everything together right now. Labor is, in recent weeks, like the last 3-4 weeks, you can make a case that labor's showing renewed strength.
Yeah.
Not like...
Unemployment rate went down.
Weekly jobless claims are falling.
Job openings, I believe, went up in the most recent read for May. Like, these are indications that in spite of that stagnant workforce that we've been talking about, it's not ringing alarm bells.
Right. So if that's happening, if that's the case where the labor market is actually strengthening right now, then you kind of look at it and go, there's not really anything to worry about, because if the labor market is, and again, we need, another month or two of this to be able to say, hey, there's something there. If that's happening, okay, there's your next growth engine.
Right.
It's the fact that consumer spending can power you through here.
Yeah.
If you go the other way, then you're sitting there and you're saying, okay, housing is kind of in the toilet. Construction is slipping, pricing is slipping, so you're not getting anything out of that. If labor starts to deteriorate, hey, that's going to impact consumer spending in the second half. That's not going to be great. And that pretty much leaves you with this AI data center CapEx boom.
Right.
As the lone feather in the cap, where you're saying, okay, that's the only thing that's really pulling this puppy along. Is that enough? Maybe.
Yeah.
But to this point, the last 3-4 weeks, you look at the data and you go, yeah, what is there? Why would you have anything, happen imminently here? The only other thing that's out there that we still need to watch is what happens on pricing as these tariffs have, more time to come into effect. And certainly it seems like baseline tariff, and this is even from President Trump this morning, he says that he expects the global baseline tariff will likely be somewhere in the 15 to 20% range. So moving up from 10, right as we're starting to feel the impact of that 10, these are things that you wonder about. How does that potentially impact the economy further? Can companies, absorb another 5 to 10% increase in import costs? We'll have to see.